All right. Hello, everyone. We are live. Welcome to a new edition of the Fivers Futures live trading session. Uh-oh, I'm having echo. All right, we're good to go. Let me know who's here. Let me know in the chat. Let me know how you're doing. What are you trading? What are you looking at? How has your week been so far? If it has been a green week, well, congrats to you. And if it's, a red week, we'll consider it to be a learning week. All right. So we're going to get into these markets and see what is going on. But let me know in the chat. Let me know what you're looking at. Let me know what you're trading and we'll get into it. I have the futures ES contract loaded up here. Was checking it out really quick this morning. We're going to get into everything. We're going to look at oil. We're going to look at gold. We're going to look at everything of interest today. And we'll see what to trade and what to do. Yesterday we had a good session with Steve. We caught a little bit of this move right there. Actually, still have the levels from yesterday's session. Let me show you really quick what was the setup, and we'll be looking for something similar today. We'll see which asset lends itself to the best trade. But yesterday, as usual, we look for opening range breakouts or breakdowns. And honestly, the reason why this is the most common setup I use on the live is because it's one of the setups that will allow me to take a trade live. It doesn't take too long to build. That is why somebody was asking me about that yesterday, I think, on a separate chat. But they were asking why do I like this setup so much? Well, I have multiple setups that I use, and probably I'll show them over time. But the ORB setup, since we're broadcasting, from 9 to 11, allows me to kind of find something that makes sense. And basically what we looked for yesterday, actually, let me drop down and get into one single time frame, and we're probably going to look for the same thing today. Is we every day we get our opening range. So the market opens at 9:30, New York session. Of course, we look at, and that's what we're going to do. We're going to look at the higher time frames, see more or less where we are, so we can form a bias. But once we have somewhat of a bias, somewhat of an action plan, we wait for more or less the 15 minutes to develop. Sometimes we get setups earlier, but that's rare. And then we look for, here we had the range. So we formed the low of the range here. We formed the high of the range. And then we knew, okay, this is more or less what we have by 9:45. So the first 15 minutes. And then we marked the halfway point of the range. Now, yesterday, once we backed up there, once we touched the lower end of the range, I said, well, this is probably an area where we could consider longs. I did not get long there because I wasn't 100% sure of how the moves were going. We're looking at different things, Steve and I. So I waited. We pushed higher. We pulled back. We broke out of this range, and then we pulled back again to the 50% area, which is why this area is pretty key. It's like you're getting, a 50% off, 50% discount on whatever you want to buy. In this case, it's the ES. And that's more or less where we scaled in. I think I bought it around here. And then we were holding for a move to the upside, right? Which happened immediately after. Now, targets are measured based on this opening range. Why? Because this opening range tells us, okay, this is the displacement we're getting. So yesterday we were getting about 12 points. This is the ES 12 and a half points of displacement. So we copied the range and we're targeting two areas. We're targeting the halfway point, which is about here, and we're targeting the upper end of the range. Now, if it's a day where we're gonna trend, we could target, 2 standard deviations. So basically twice the size of this box, or maybe 1.5 times. So we would be targeting 4 key areas. There we go. So area 1 is the halfway point. Area 2 is the top here, this level. Area 3 is here, and area 4 would be here. Now, if it's really trending, it can go even higher, like we've seen in the past couple of weeks, but this is what we would be targeting. Now, the interesting thing is yesterday we touched the upper end of the range, and that's where you could see the asset pull back, right? We formed we changed our structure and pulled back, right? And then later on during the day, we went and retested. Come on, let's move. We went and retested the upper end of this range. And then later on during the day, what happened? We broke out and went and retested just barely the halfway point. So if I drag this line here, you see you could have reached that by 3 in the afternoon. Now, me personally, what I was looking for was follow through right after this. And then we got to think about the context. We had the Fed speaking, we had the new Fed chair speaking, Kevin Warsh, Mr. Warsh. So once we did a pullback. My entry was there. My stop was below the low of the range. We pulled back. We retested the high. I saw a second drop. So as we moved up here, I exited the trade for just a small profit, because my plan was not to hold this trade necessarily for the whole day if it wasn't acting right. And we were talking about acting right, Steve and I. Acting right would have meant what we were looking for was, okay, we reach this area here, we pull back maybe to the upper end of the range, or maybe retest those highs. So we stay above, those 7 150s, and then we continue to push higher. We go test those 7 160s, and then maybe those 7 173s. So that was the plan for this particular trade. If we were gonna pull back and then oscillate throughout the day, and then go test here again later on during the day, so that would have been an all-day hold. This was not our plan. So that is why we did not continue to hold this trade. Now, let me know in the chat what you're looking at. Let me know what you're trading. We're going to prepare. We're going to do a little bit of preparation pre-market to know how we're going to attack things today. But this is just a quick recap of what we traded yesterday. So first, you know what? Let's go and take a look at the elephant in the room, which are the oil futures. You know what? Let me switch here. Let me go to CL on my trading view platform here, because I want to zoom out and take sorry, let's go on an hourly chart. I want to go and zoom out and take a look there. So what we are, you see I have a big yellow box here. What we are attacking here and where we are re-entering is that gap here. We had that gap down from 98 to about 92, the 92.80s. Oh, we got Greg in the house. How you doing? How you doing? Welcome back. Welcome back. So we've just started here. We've just started looking at things, and we're looking at oil for now, and then we'll rotate into everything else to see what setups we're able to take today. So right now we're looking at oil. So the interesting thing here is that we have reached the inside of this range again, right? We oscillated down. oscillated sideways, found some support at the 79s, and then we're back into those 93s, mainly because the uncertainty is still there, right? If the price of oil is rising, it's because geopolitically on the international plane, we are still uncertain of what could happen. Yes, you could call that a fair value gap, right? It is definitely a gap, and the fair value would be considered, around the midpoint of that range. It's interesting that it's 95, which is a very interesting number. So what we're looking for, if we're looking at oil, is okay, can we go and continue to hold this trend? You see I have a trend here. This is an hourly chart, which means it's going to take a while to kind of push higher and continue to build that structure here. And then once we reach that $100 level, what we can expect is acceleration. So we might break out, look up. Remember, there was an area here where we had a little bit of consolidation. So we might see a little bit of rejection here if we don't break through decisively, right? And here I'm just looking at oil on a I'm having a technical view of the asset. We have to keep in mind that the uncertainty, what's going on in the Middle East, has a lot to do with how this is going to move and how fast this is going to happen. So we're looking at the bullish case here. Bullish, oil price is getting higher, which might not be great for everybody, but we're that's we have to have a cold-hearted look at the asset if we're trading it. So we might go breakout, look up, right? Pull back and continue higher, and after we've tested this key $100 level here. That whole number, the $100 level, is a key number. So this would be the bullish case, and we'll put this in green as usual, right? But we need to keep in mind that we need different scenarios. So if we're trading this on the short side, well, you saw here we had a nasty rejection, right? This tells us a lot. This candle here, this hourly candle, tells us a lot. Why? Because we got to the middle of the range, we tested it, okay? Greg just mentioned fair value gaps. Well, we tested this, and if you were thinking about going short, well, look at what happened. You went in, you tested this, pulled back. Let me get, I don't want an arrow. Where's my thing here? I want a path. There we go. Oh, I have it here. I have the shortcut. I don't know why I'm not using it. Yeah, we went up, we tested this, pulled back, retested lower, and pushed here. Now, there are different areas supporting this level, right? So let's think about this for a second. Now I'm going to put this in red because this is the bearish case. Let's think about this for a second. There are many things that are intersecting here, and this is a pretty key area, at least on a technical level, for the asset. We pushed high, we formed a lower high, right? We are here at the previous horizontal level of support, which is around 92, 93. That's the first thing. The second thing we need to keep in mind is we've developed kind of an uptrend. So we want to know, okay, can we hold this uptrend? If we are unable to hold this uptrend, if we go and then let me continue this line. So we tested, pulled back, retested the halfway point there. We pulled back. If we are unable to push beyond this point, and we go and retest those highs, what is the likely bearish scenario if we're bearish? Well, we should go decisively break below this level, right? We will have shorts to cover, and then we might go and retest the lower end of this range here and pull and continue to the downside, targeting the previous areas of support. You have those 89s and then those 87s, more or less. Well, This area is key. So we want to see actually when the market opens, how do we react here? And we've seen equities try to continue to push up, and we're going to look at equities here. But if the equities are unable to go up, we know this is inversely correlated. We might pull back and go test lower levels. Now, if oil remains undecided, the likely scenario, the neutral scenario, is we kind of form some type of base here, and we kind of move here, maybe code test a little bit higher, unable to hold a trend, but we would still, we would move sideways inside this area right here until we can break out of it. So we are really in a key. Let me put the neutral case in yellow. We are really in a key area here, right? This 92, 93 level is really key for today and tomorrow for the rest of the week. We don't know if we're going to get surprising news this weekend. Brace yourself. That might happen, and that might change the scenario here, change the situation, and we would see one of those scenarios playing out. Of course, they're not going to be exactly the way I show here because I can't predict the future. If I could, I would be a trillionaire trader. But we are looking at possible scenarios here. We have the bullish case, the neutral case, and the bearish case as usual, right? Now, the line in the sand is the halfway point of this gap here. If we're able to hold above it, we will definitely push higher. If we are unable to, then it's highly likely that we will move sideways or go and retest the lows. Now, if we go retest the lows and we push lower on oil, we need to keep in mind that for equities, that is bullish, right? And speaking of equities, we're going to rotate and go look at our friend, the Nasdaq. All right. So this is the hourly chart of the Nasdaq. We're kind of, as everybody knows, we're at all-time highs. This yellow line that I have here is the last all-time high that we broke above. So if I zoom out, we can see, let me put this on a daily chart. All right, so last time we were at those highs back in October 25, this is where we were, and we broke out of those 26,850s. We're now above this. This is a daily chart, and we have moved. Man, this is an impressive move every time I look at it. We have moved 4,000 points in 22 days, 16 trading days, 16 bars. So in basically 2 weeks, we have moved up 4,000 points. That is significant. Let's look at the last time we moved for 4,000 points, how much time it took. Let's maybe measure from this last high here. Let's see. So here we had moved 3,000, so just under 4,000 points, 3,920 more or less, and it took 90 bars, so 128 days. So this is pretty significant, right? This is a very, very fast move, and this is why I like to look at the speed of price. Now, we're at all-time highs. Keep in mind, you do not want to fight the trend. This can go on. This can continue, right? But we're seeing, some indecision here. We broke out. We had a little bit of a pause here, and we broke out, and now we're pulling back. So, as usual, we're going to have our different scenarios. We're going to look at this from the bullish side, the neutral side, and the bearish side. When I say bearish, I'm just talking about a pullback because overall, we're still bullish on the indices. Unless oil decides to take off and halt this, we're still bullish overall. So let's drop down to an hourly chart. We've seen a little bit of a pullback since yesterday's highs, right? The Asian session, we kind of pulled back sharply and then we recovered, and we formed here of a double bottom structure, right? Those W patterns that are often talked about. So we pulled back sharply here. We saw this wick, quickly recovered. I was looking at this last night. I actually took a trade there last night and caught part of that drop from about 27,000 all the way to about 26,930 more or less. So about a third of the range. We got a nice little trade there. And then we moved up to the halfway point, so 50% pull back again. We formed a higher low, right, which is bullish. Pull back, went and retested the highs, and we're pulling back again. So honestly, if we are able to hold the $27,000 level, I don't see why we cannot continue and go for today. I don't see why we can't go and retest those 27,100s, right? That is about 125 points from here. This would be very, very easy on the Nasdaq for an asset that moves. Lately it's been moving about, I would say, 200 points in the New York session. I haven't checked the average daily range, but that's the possibility we're looking at here. So let's see what happens for with the Qs later on today. And this would be again our bullish scenario where we continue and go retest those highs. We'll zoom in and look at it a little bit more in depth in a few. We're about 10 minutes from the open, but this is the possible scenario for the NQ. Let's look at the ES. The ES, on the other hand, is looking slightly more bearish. The ES, the S&P 500, has been struggling a little bit in comparison to the Nasdaq. So if we zoom out, we still have taken the highs. We broke that coveted $7,000 level, right? That we tried to break out of multiple times. So we've broken out of it decisively. And if we're talking about classical chart patterns, we are forming what could be called a ascending triangle, which is, bullish based on technical analysis. So I'll just make it with my arrow here. We're forming kind of this shape here. So the logical, it's not the best shape, but yeah, you get the idea. The logical next path is to continue upwards. We could break, retest, and, break higher here. Now, here's an interesting thing, and let me zoom out completely because I've shown you guys this multiple times. If we zoom out, we have a clear uptrending channel. We've tested the highs of the channel, pulled back, tested the midpoint, and retested those highs, and we kind of broke out from there. Now we're back to here, right? So what we want to find out is, okay, do we have room to push higher, right? Do we have the energy, the volume to be able to push higher, go retest those highs, kind of like we did here, right? And once we get here, do we pull back and go either retest those highs, or do we revert to maybe the halfway point of this up move here, right? That's what the coming days are going to tell us. But for today, again, so far, the possibility remains that we might go and retest those higher highs. If we're unable to do so, we will pull back to the lows, and we'll look at it live in real time and kind of see what kind of trades we can come up with. Now, if we continue, let's take a quick look at the Dow. The Dow again looking a little bit more on the bearish side. We haven't been able to break the prior highs with the Dow. Let me get this out of the way. This was an old study. I have to say, because I trade with Samir on Mondays, I've been more and more interested in the Dow, and we took an awesome trade this Monday. You guys can go look back at this trade. We had a very, very nice setup, and we took it together, which was great. Yeah, the Dow is showing relative weakness in comparison to the other assets. So something to keep an eye on there. And then let's look at the Russell. Russell, very, very bullish. We've taken out the previous highs here, around here, and forming somewhat of a similar pattern formation, something that looks similar to the ES. So we'll see what happens there. And then let's rotate to our friend GC, the gold futures. So I call this the indecision zone, right? We've been talking about this, Jane and I think I touched on it with Victor last Monday. We are in an interesting spot on gold. We're kind of in the middle of nowhere, right? Here, it's really 50-50, in my opinion. I think there's been a lot of rotation out of gold and into risk assets. So I think a lot of the profits that have been made on gold have rotated to, maybe tech, the AI sector, probably. Um, I am not seeing the asset. I'm not seeing gold behave like a safe haven yet. Of course, it has. It's been super bullish, but we have to digest the move, and that's understandable. So here we are, kind of in no man's land. I know some people who've been short gold, but it's been a hard short. I know we discussed people who were short from, I would say, the beginning of April, so around here and here. But it's been a tough one to hold. I mean, if you were risking those highs, I remember we were talking about some people being short here. If you were risking those highs, right? It's been a tough hold because I don't know, say your entry was somewhere around the 4800s, which I think somebody said they entered short here, and you're holding these highs. I mean, it's been a tough one. You had the trade start working out here. We found support at those levels. We retested higher here. By the way, this is the daily chart. And then if you were risking here, you probably got stopped out, right? So if you're short gold, it's a tough one because we're moving sideways. We're inside of a range. Let's kind of zoom in a little bit to see, from a day trading perspective, where are we at? So let's look at this on an hourly chart. Let me reset the chart. We looked at this yesterday, and I told you guys that I tried. I had a couple of stabs at it, and the overall idea worked out. But again, it was a tough short. So my idea was to go short gold. Why? Because we had this trend. I was looking for a pullback for us to go at least test the midpoint of this range. So I started shorting around here, around the 47. I think my entry was 47.72. So around, oh, that was a low entry. All right, around here, risking those prior highs somewhere here, but I got stopped out twice. Tried a long. The long was, I think it was on that, let me see, around here, on that bar here. This is an hourly chart. And we got a break even trade. And then I just stopped. I decided, okay, we'll do like baseball. We've had three tries. Let's stop. But it's been a difficult one to trade. And anything that's kind of moving sideways, at least in my opinion, can't, unless you're a super mean reversion trader, can be hard to trade. And look at this. I mean, it's not giving you a very, very clear path. So here we kind of form this structure here. What we were expecting, at least what I was expecting here, was a break, a retest, but a faster retest, which we did, and then a break lower. But you had to really hold this trade. It wasn't really a day trade. You had to hold overnight to kind of get what you were looking for. This was a 10-hour hold, so not a great day trade there. We would consider this a swing trade. And if you were short from around this area looking for a continuation downwards, it's been a struggle because we've had two massive recoveries here. And what this tells us is, hey, uh there is money re-entering gold, right? So around here, around those 4760s, and then we formed a lower high right here around those 47 58. So slightly lower. So let me just get those highs there. Let's see. Yeah, so we're holding really in the middle of a zone, and it is not 100% clear what the asset wants to do, right? We are, because after a down move like this, right? This is a 15-minute chart. By the way, it's the market is open. We're going to look quickly at what We'll get back to gold. Let me just look quickly at what the Nasdaq is doing. All right, we're still in this range. By the way, this is our Black Arrow platform, which we use to trade futures with. And let me know, guys, you haven't let me know what you're looking at, how your week is going. What are you looking to trade? Do you need me to look at something in particular? So we're seeing some buying here on the Nasdaq. So they're definitely trying to hold it up. We see some volume increase. There is no news today from what I know. Let me double check. Oh, actually, no, there is news. We have the jobless claims that came out at 8:30. I'm going to look at that. We're holding up pretty well. And then manufacturing PMI. The reality is these numbers are, I wouldn't say they're not driving the market as much as usual. What's really driving the market here is the geopolitical situation. So I'm not too concerned about economic data for now. Justin Kong, welcome. He said, would be good to look at how oil is doing as it's always in divergence with gold, especially after the war. We're definitely gonna look at oil again. We were looking at it this morning. We could take a quick look right now. Let me reset this. Oil pushing up slightly. So CL futures kind of holding up right there. So we know inversely correlated to the indices. If we're moving up on oil, we'll be pushing down on the Qs and the S&P 500. But here's an interesting take here. We're pushing up, but we're pushing up ever so slightly, right? And we have a lot of areas here. We have multiple tops, at least in the short term, to break through to continue higher from. So if we continue to oscillate in the middle here, the question is how much of a sign, how much of an inverse correlation can we get in a sideways oscillation, right? If we're moving sideways on oil, how decisive are the moves on gold and the index is going to be, right? We will have to see. So the sorry, the ES trying to hold up, okay. And then let's take a quick look at the GC, our friend gold. So we had this downtrending pattern here. We formed a double bottom. We're pulling back. So the question is, can we hold above this this prior resistance area and continue to the upside if you're bullish, of course. So we'll have to see if this holds. It's not 100% clear on gold yet. So we'll have to see. And Justin, you're saying after the war. I mean, the war is still ongoing. So honestly, we're on, at least for me, on whether it be on gold or on oil, we are kind of in what the price action is telling me is it's wait and see, right? For the most part, we're not 100% convinced. We're approaching the weekend. We know very often breaking news comes out in the weekend. We find out that this or that happened during the weekend. So we'll have to again wait and see. Give the price more time to develop, so it tells us what we want to do. Now, an interesting thing here on the Nasdaq is we're seeing definite buying since 8:45 here. Those wicks are telling me that buyers are stepping in. So we want to see, okay, can we break out of this this little accumulation here? Justin saying, I mean, since the war started, whenever oil spikes up, most of the time gold waterfalls. Yeah, we could compare both actually. Let me just put both of them side by side. I like to compare assets. So we have gold on the left, and then we're going to put oil. Wait, gold is on the left, and then we're going to put oil on the right. And we're going to look at it on the daily. So this is oil, and then let's pull up gold on a daily chart as well. Let's just look at the past few days. So this is gold on the left, and then oil on the right, right? Are they very inversely correlated? I wouldn't totally say that. You're right. Let's just look at the past 3 days. I'm gonna hide them so we can clearly see past 3 days, or past 4 days, which is this week. These are the past 4 days on gold. These are the past 1, 2, 3, 4. So we have 5. Okay, let's put 5 days. So yeah, they are somewhat inversely correlated. As oil has been pushing up, gold has been pushing down, but it has been a struggle. It's been maybe let me put an hourly chart here so we could see it clearly. So let's look at it like this. So this past 2 days, and then past 2 days on oil. Right? To me, it's been a tricky market. You've been getting, so for example, explosive moves to the upside, gets rejected. We retest here. It's been a tricky one. It's been a tricky one. You said it's almost inverted. Yeah, in hindsight, in hindsight, I would say the indices are probably a better comparison. So if I look at we'll go back to the Nasdaq in a few, but you could look at, okay, oil is pushing up. You could short gold, um, but it's been, at least for me, a tricky one. Even though they are pretty much inverted, I don't really see clear setups and behaviors here. But let's see what the geopolitical situation says. Let me know, Justin. What are you trading? I bet it's gold and oil. So, all right, we have Stefan in the house. How you doing? How you doing? How you doing? Welcome back. Welcome back to the live. All right, we're gonna switch back to the Nasdaq. Let me just close this. Let's go back to just one asset. We are definitely trying to push up on the Nasdaq. Let me just look at something really quick here. All right. Okay, so buyers starting to step in, which is good for the index. Put my bracket here, 1 to 1. Okay. Yeah, so we are pulling back. We're kind of breaking out of this structure right here. So what setups are we looking for? Well, right now I want to see, can we reconquer these highs? Can we hold above them, pull back, and maybe continue? If I'm bullish, that's what I'm looking for, right? I'm not gonna rush into this trade. Justin saying, yeah, looking at gold indices, it's kind of tricky when it's at all-time highs. Definitely, we are. It gets kind of tricky when it's at all-time highs. It's harder to swing trade if you're a swing trader, but you can definitely take some intraday setups, and that's why I've been looking at the opening ranges a lot and kind of determining my moves based on what we do with the opening range. So let's kind of do what we usually do. Let's find our opening range, see what the displacement has been. Let me put this in pink like I usually do. See what the displacement has been, and we'll determine from there what our trade is going to look like. So 930 was around here. This was 930. We formed the low of the range here. We are inside the box. The 50% would be around here. Let me put this on a 1 minute chart instead. Yeah, 50% would be around here. And where is 945? 945. All right, we still have about 5 minutes to go, so we'll see. Right now, we're going to retest those highs. So let's say our range expands all the way to these highs. What I want to see is, okay, we broke out of this little consolidation here, just like we had a move here, right? So can we pull back? So we're retesting those highs. Can we pull back and we hold above this and then possibly go retest those highs? Can we pull back again, retest those highs, and continue higher, right? If we are able to hold here above this maybe 50% retraction, so we'll see depending on where the highs go, I'll modify the box. If we're able to hold above the 50% retraction, then I will consider entering a long trade. Justin saying, like what you share, let's wait for the first 15 minutes and draw some boxes. Definitely. I mean, the thing is, if we're not super bullish, if we're oscillating sideways, there is no rush, right? If we look, for example, yesterday at the ES, we took the trade yesterday. We took it early because I took it on stream. We took the trade around, I was showing it here. We took the trade around here. But guess what? We could have taken the same trade. We took the trade around, what was it? Around 10 o'clock, 10:04, I think. You could have taken that same trade around 1 p.m., right? And you would have gotten the same exit areas. Maybe with a little bit of a struggle because that pullback would have been tough to hold. But we're not seeing the explosive moves we've been seeing for the past few days. And it is to be expected, right? We've been moving up for 2 weeks straight up. No, barely any pullbacks. So right now, the thing you need to think about is, hey, the price needs to digest, right? We need to the people that bought way below need to exit their positions. And I'm talking about big money. Big money takes days, sometimes weeks to exit positions. So I don't think we're going to get the huge moves that we've been seeing for the past few weeks, at least for the coming days. Of course, I might be totally wrong, right? But for now, let's wait. Let's see what the price wants to do. Let's, let us kind of show its hand, and then let's take our trades. Of course, if you're a hyper scalper and you're looking for 10, 20 points, hey, you could totally do that, right? You're risking 10 points to get 20. You're risking maybe on the ES, you're risking 5 points to get 10. Hey, if that is your style of trading, that is totally fine, right? That is totally possible. But for now, I want an easy trade. I don't want a hard trade. I don't want to be going in and out fast. I want something that is easy to catch. So right now we're going and retesting those highs. So we'll see what happens there. I'm just going to oscillate and rotate to the other assets. Let me just put this around here because it's almost 9:45. Let's go see. So this is the Nasdaq. Let's go see what the ES is doing. All right, ES is moving in a similar fashion. Now this is an area of interest here. This is probably a good entry for a short. I'll look at how the volume profile is looking, but we're retesting this area here. So if we're unable to capture this, this could be a good short entry, and it would be a fast one because you would be looking for kind of a move back to the 50% area of the trade. So if I put my usual box right here, let's look at 930. 930 is around here. All right, 930. We're retesting this area here. So if we're pulling back and we're taking a short, this would be a quick one. So you're looking for, a look up and then a push down to maybe this area here. So we'll see what happens. And then if it's bullish, it'll hold and go retest the highs. But I want to kind of see a couple of moves before I take my trade. It's totally possible to take a short in this area. You would want to see a wick up and an increase in volume here. But let's see. Now I'm gonna switch, and I want to see where the volume is on these assets. And you know what? I'm gonna add my session volume. So session volume profile, there we go. How come this wasn't there? I've been using it. And then let's put everything gray. Why hasn't, I don't know why. So I'm using the desktop version and the online version, and there's, I don't know, it's kind of been messing up my my charts for some reason. And then we want this to have 100. All right, for higher resolution. Okay, so we're this is a good sign. We're holding above the point of control on the Nasdaq. Let's see on the ES. We're holding above the point of control as well. We're retesting those low volume nodes here. So that's why I'm saying a short might be valid unless it is a short squeeze, right? So you could possibly take a short around once it gives you the sign that it wants to turn down. You don't want to short right now. You want to wait a little bit. Let it give you a sign. Let's see, Nasdaq, where is it? So you see here, we kind of got people try to short and it was bought back up. So this is a very good sign here that we might be more bullish and bearish, right? They tried to short here right at this prior pocket of resistance and they pushed it lower. So now we're breaking out of the box, which is a good sign. That is a bullish sign for me. So what we would need if we're gonna take a long trade is a break here. We close higher. I'm not gonna take the breakout. I'm just gonna wait for a pullback and enter on a pullback. Why? Because this is not the uptrend. Overall, we're moving sideways. So let's look at the overall picture. Let's zoom out. We close this here. At least on the Nasdaq. Okay, actually, you know what? Let me rephrase that. We are breaking out and we might be continuing the uptrend. So this might go without me, but I don't want to enter on the breakout. I want to wait for a pullback if I get one. So let's wait. Let me look at the Dow. Dow's looking good. And we haven't looked at our market internals today. So let's look at the VIX. The VIX is around 19. That's good. Do I also short or only longs? I'm actually, I think my stats say I short, I would say 65% of the time. So I'm usually more short biased than long, but I'm not gonna fight the trend, you know. I like shorting better because I have better reference points. For me, it's harder to just go long and hold, especially at all-time highs, because you don't know how far you're gonna go. Whereas when you're shorting, you know, okay, I'm getting here, and then these were the prior areas of support and resistance. So I kind of have clear targets. And shorts tend to happen faster than longs due, due to the name short long. I think that's where the name comes from. You know, short happens fast. It's a short hold, whereas a long, it's a long hold. You're holding for a long time. So I prefer shorting in comparison to going long. But when the chart looks like this, let me just show you the index. When a chart looks like this on the daily and it's just a straight arrow up, I mean, I'm not gonna shoot myself in the foot. It's hard to short this unless it makes sense, right? So that's why I'm being patient these days. I'm waiting. When we were in this area here, right there, those past days, I wasn't as patient. Why? Because it was running away from us. Then we got to the new level. We oscillated sideways a little bit. So now I want to be a little bit patient because I'm expecting sideways consolidation. So we'll see. What about you, Justin? What do I've been asking you what you trade. What do you trade? And then do you prefer shorts? Do you prefer longs? You have no preference? Well, there you go. That's what we were looking for. We looked up. This is a failed breakout, and we're pulling back. So now we want to see, okay, can we hold this level? Can we hold here? And if we can hold here, then I'll go long, risking the prior lows. Ideally, right here. But it all depends on what we do in this area here, right? I can highlight it. We have this area here, which I would consider to be fair value. Now, a lot of people look at single candles, and that's totally fine. I like to look at groups of candles. I like to see, okay, what did we do here in the group? And sometimes I might be too patient and wait too long, but that's fine. Because I'm not in a hurry. Justin saying he's looking at gold, also Nasdaq as I'm looking. All right, let's switch to gold. Let's go take a look at gold while I wait for this to build to see if we get a trade. Let's look at gold. Nice. Well, guess what? What we kind of talked about here is playing out. I said if we get a pullback and we're able to hold, we might go and test higher, and that's what is the scenario so far. The only thing is, for the way I trade, this wasn't looking great. And then you have to keep in mind that we found a resistance here. Okay, we might break higher. That is totally fine. But you have this previous area of resistance here on gold. So we want to see if you're in a long wherever you're at. Let's say you got in at 47.50 and your stop is below here for a day trade. You want to see, okay, can I go and reconquer this? Can I break through this decisively? And if there's too much hesitation here, then that might be an indication that, okay, we probably have to pull back again. I would have wanted maybe a deeper pullback above this, but this might be your bullish sign. I really, really can't tell here on gold. It is a very difficult read for me or for the way I trade. This hasn't been clean enough, right? You're saying double top. Anything's possible, man. We don't know. We'll see. The real good buy on gold was around 7 o'clock this morning, my time, 7:30. So we'll see. Let's look at oil. All right, so we're rejecting here, which is bullish for the other indices. So that's good. That's a good sign that oil is pushing lower and finding resistance at those levels. Let's go back to the Qs. All right, so we're pushing lower on the Qs. Now, this is not convincing yet enough to go long. This is actually looking more like a short to me. Whoa. Man, I need to stop with those fat fingers. Let me look at the 5-minute, 15. So if we retested those highs, so what I do sometimes is I will go counter my bias. I will go short when I want to go long. This is still looking like it doesn't want to go up. So let's try a short here, risking those prior highs. And then we'll see if we can go and how we can hold this this support level. So we're short, tiny short, just one contract. And let's see how we react here, right? If we're able to find buyers, then that means the long is still on and we can get that. But if not, then we'll hold this short longer. All right, so what is the idea here? Why did I short? Well, we went up, we tried to break out of this, we pulled back, we retested this on this pullback, and now we're moving lower. So what I want to see is, okay, as we push lower, are we able to hold above this? Are buyers eager to get in? Do we see increased volume? And if we do, then okay, my short is invalid. We'll go long. But right now, the way we're moving, the way we're pulling back is not indicative, at least for me, of a very, very strong move. So let's see if we're going to push lower. And this is a scalp, so I'm going to just trail it. I'm not going to wait for it to do too many things. So let's see if we can get a quick in and out trade right now. Let me look at the points. So maybe we get 20 points, 25 points, 50 points at best out of this trade. We're risking 50. So for 50, that would be a 1-to-1. Unless it starts to move in a way that shows me that no, we're not gonna go long. So for example, if we're able to break lower than the 50% here, then the short is on. But let's see. So by the way, Justin, for you who is asking, do I go short or long? I just entered the short. I don't mind going either way, as long as it makes sense. All right, this is a 15-minute chart. We're still holding. Let's just see if we can hold those highs. It's going to be 10 o'clock, so the bias might change after 10 o'clock. So let's see what happens. All right. We're moving lower, and we want to see, okay, can we hold above this this area that I showed here? Let me get this out of the way. We're just looking at kind of this 50% area here. This is the key area. This would be the area where we would need longs to step back in to go higher. And if that happens, I'll either exit the trade or I'll just reverse the trade long. Targets for the short is probably this low unless we're really, breaking lower decisively. And then we have a little trend here. Let me put this as a dotted line in blue. This little trend here is our indicator of, okay, are we going to retest here? Okay, so that's good for longs right now. We're seeing a little bit of buying. We're seeing a little bit of increase in volume. So let's see if we can hold this. And now we're going to start to trail our stop, just because this is a scalp. We're not looking to hold this for long. This is just confirmation of whether or not we should go long. So I'm just trailing this really tightly. This is just an added, how could I say, an added check in our flavor, in our favor of whether or not we should go long. And then the great thing is we'll have some powder, so some added risk to be able to take a long trade. All right, we are 1 minute from 10 o'clock. So let's see what happens at 10 o'clock. If we completely break down, then this turns into a longer hold. Now we're break even on the trade, so basically risk free. And we're going to retest these lows here. So what happens at these lows determines whether or not we hold the trade. Now we're eventually going to get a pullback if it's a long. If it's not a long, then we're going to break down from here and go test lower these areas of liquidity. right? We're going to see here, can we test this area of liquidity? We're breaking lower. We're looking to capture about 50 points on this trade. We're about 58 points in the profit. And then we're seeing that increase in volume. Okay. That means people are coming into the store or walking out of the store because we're getting discount prices here. So is it going to be too cheap to buy, or is it going to be, okay, that is the price we wanted. That's where we want to buy. So if I zoom out, all right, we're seeing increased buying here. And all right, it's 10:01. Let me get on the 5 minutes, see what this looks like. So this is not a super bullish sign, by the way, not yet. Because if we were bullish, we would have held above this yellow line here. If we were very bullish, again, things might completely reverse. But right now, we're pushing lower. We're not looking super bullish. Let me just zoom out and look. Day analysis. What am I looking at? All right, buyers are starting to step in a little bit. We saw increased volume here. We're holding at the low of the range. I just want to get out before we get the pullback. Eventually, whether this is a short or a long, okay, we're continuing to drop here. Why don't I see my trend line? Okay. All right, we're seeing increased buying. So I'm going to take my profits right here. So longs have started to step in. Now, the question is, can they hold? So we took a quick scalp here, about 50%. I mean, about a 50-point win here. So now we want to see, okay, can we hold the lows of the range? So first trade of the day, quick in and out, 50-point win. Let's see what we get. So we're seeing the similar behavior in comparison to the morning, right? They bought here, they bought here, they bought here, and now they're buying here again. Can they hold this? If they can't hold it, then we enter short again. If they are able to hold it, then we get the long we've been trying to get. All right, so let's go look at gold. Justin, you called it. You said double top. Look at what happened. We pulled, we tested here, and we're pulling back. Now, if we can hold, and that is what I was talking about this morning, if we can hold right above this level here, right, we're seeing what we want to see for a possible long. We have increased volume and increased volume on the down move. So that's probably people walking in the store coming to get that discount. Can we get the discount? You missed it as you're looking at me. Okay, well, don't focus on me too much. Focus on your game plan. I don't know if you were looking for a long or a short. But here we want to see, okay, can this hold? Man, it's so hard to risk on gold on these accounts. I want to take a gold trade with you, but let me just zoom in. Risk is tight. 10 points. All right, we're seeing some buying here. I want to be convinced. I really want to be convinced. I want to be, okay, first entry long. We need to get probably a retest here, and then maybe we get it. All right, let's go back to the indexes. Let's look at our friend, the Nasdaq. Nasdaq is holding below this. So this was possibly the long entry, but this doesn't look super convincing to me yet. You know, we could risk the profits we just made. All right, we'll just risk the profits we made, but even it doesn't really look convincing. We'll see. This way, if we get stopped out, then it's a break-even trade, and then we can look for another one again. But I don't know. This is not very convincing. Here's what I'll do. I'll double the risk this way, more or less double. This way, if what we're getting is what I usually look for, break here, and then we kind of form a higher low around here or here, and then we continue higher, then that's the long. Let's just see. But this is not convincing for longs just yet. Yeah, I probably bought the top here. Let's see what we get. Yeah, that was the second entry short, probably. Let us see. Let us see. Can we hold or not? So we saw a little bit of increased volume here, increased buying. We're holding at those lows. We're right around VWAP. So there's still a possibility that this might turn bullish. But I'm not super convinced. The longs are struggling now. Let me look at the volume profile to see something. Yeah, we're right at the point of control. So can we hold above this point of control? Not very convincing just yet. I think we might have to oscillate and go find buys lower here at those 2860s. So if after this, if here we're not able to print and go higher, like if we're not able to go higher than where I bought, then I'm not holding this long. And I know my stop is at 90 plus points, but my real stop is around 50 points. So this is just safety. Let us see what we get. I need to get some music in here. All right, the buyers are really looking to buy, but I'm not seeing the volume yet. Can we get that volume? All right. You see how you're there every time it steps up, they push it down. It steps up, they push it down. If we're able to push higher, that is fine. The next thing we want to look at is, okay, once we push higher, are we able to conquer this? Are we able to break decisively over this area? That's what I want to see. All right, we're going to add to our position in a few. Yeah, this is not convincing as a long, so I think I'm going to reverse. If the next candle, because we're holding at that same resistance level. Let's see what the next candle does. So here we have this little trend, micro trend developing here. And that is my trigger for the short. If we're able on the next candle to hold above this, right? And if we're able to push like that higher, then we hold it. If we're unable to do it and then we break below this, then the setup that we would be contemplating is, okay, we just broke lower and we're seeing increased volume here. So that's a good sign for the short. We break lower, we get a retest of this, and then we add to our short. So let's see. Yeah, we're breaking out of this. Long is less and less convincing. All right, about 10 seconds to go before this candle closes. Can they hold it? Buyers are really trying to hold this. All right, we're gonna go short. I'm gonna add to my short. And then as usual, we'll be targeting lows here. And we'll have two stops, one at 50, one at 100. And let's see, I guess buyers are stepping in. This was probably the fake out. But the longs really didn't convince me today. Let us see. We might be shorting bottoms, but all right, it's going to be 10:15. So that would be, we're still inside the box though, right? Still inside the range. We're just trading, under, I would say this is the 50% of the range. We're still trading under 50% of the range. So that here to me is bearish. But until we can break decisively below that, anything's possible. It's just that I haven't been very convinced by the buyers as of yet. Yeah, right. We went above, we pulled back, we weren't able to hold here. Maybe this is a liquidity sweep and we're going to push higher, but we'll see. Let me just zoom out a little bit. Let me look at the 30-minute. Okay, they're still trying to hold. We're above this resistance here on the longer time frame, so that's why it's good to look at the longer time frames. Is this a break, a retest of this high, and then we're going to push lower? We'll find out. We're seeing increased volume here, so that's might be buyers stepping in. And I'm still open to the long, of course, if it makes sense. Hourlies are starting to look bullish. So maybe I was looking for that long too early. Still open to it. I'm seeing increased volume here. So that's a good sign for longs. Let us see what we get. So that microstructure is what we were looking for. I said for the short, we've kind of formed a double top here. Let me just show you. Double top, we broke that little micro trend. We're retesting this area. So if we can go, if this was a true retest, we'll go and form a lower low. If not, then what we just witnessed here was pushing lower and then kind of a liquidity sweep of this low here, and then we push higher. So we'll see if it's true or not. If we're able to hold above the 50%, then the long is on. If not, then it's on for the shorts. Let's see. And I'm still open to flipping my bias. I know some of you are looking at gold. Let's take a quick look. Gold pushing higher. Is this pushing lower? Is oil pushing lower? All right, oil pushing a little bit lower, which is good for equities. We're still holding below that 50% line. So let's see. We have Greg saying, is the volume indicator the same as the momentum indicator? I've never used a momentum indicator, so I can't. I'm going to have to look at this online. I've never used that. What I use is volume, because the analogy I always make is think of it like a store, right? Think of volume as, okay, how many people are coming into the store? So for example, we know about here in the States, we have Black Friday and we have those door busters, right? So for example, when you hear they're giving, or when people hear they're giving 50% off, 70% off, 90% off, back in the day before the internet, you would have people running to the store going to get their products. So when we see an increase in volume, that tells us something, right? So for example, here, as the price was moving down, we had an increase in volume, and that usually can be an indication of a turn. And we saw, somewhat of a turn. Price was moving down and then the volume increased sharply. But you need to ask yourself, okay, is this people walking into the store or not? Momentum, I use different things. I don't have them here on this platform, but I'll look at the time in sales. I'll look at level 2, and you could use the 1 minute as a proxy to see, okay, what is the momentum? How fast are the candles moving? How wide are the candles? What is the displacement on them? It becomes intuitive the more you trade, but you can use that to determine how much momentum is in the stock, how much displacement we're getting. And right now, we're moving sideways and we're oscillating around 40 points in a 40-point area. This is very tight for the Nasdaq. And the picture as of yet has been what? We tried to push higher, we were not able to. We pushed lower, and now we're oscillating in this 40-point area in the lower half of the opening range. So far, this is more bearish than bullish. So far, I would say 60-40. The reality is this is an area where people have bought before, and it's a prior resistance area. So this might turn bullish, you know, all of a sudden because buyers are able to hold. But until I'm convinced otherwise, I'm gonna hold short. So as long as we're below the 2720s, more or less, this is my line in the sand. As long as we're below this, this is my this is a bearish sign for me. You know, as soon as we're able to reconquer this, then we would flip our bias and go bullish. So now the volume, there's two types of volume indicators that I use. I use just pure volume, financial volume. So basically how many transactions are happening. You could just hover over it here. You'll see it tells you financial volume 608 million and then 5,400 trades, right? And then in comparison to here, you could see the volume is building like 1,000 trades. So here we've had 1/5 of the transactions. This is just telling you how many transactions, how many people are walking in and out of the store. Now, what I use as well, which is a little bit more informative, is the volume profile, which tells you the amount of shares that have been traded at a certain price, right? And there are areas that are very important. You can look at the shape of the volume profile here, and it gives you kind of this shape here. And this area is where the most volume has been traded. So this is where the most transactions for this session have occurred. And what it tells you is that, okay, here is what what is considered fair value. So we're right at fair value. If we're trading above fair value, then that means people are willing to pay more for the asset. If we're trading below fair value, then that means that, okay, we need to get a discount before buyers step back in. And then we have what we call low volume areas or low volume nodes. This is a high volume node. The low volume nodes are areas where we've traded before where, you know, price is considered to be either cheap or expensive. So once we go test them again as traders, these are areas we need to observe to decide, okay, do we need to get in or do we need to get out of our trade? But right now, since we're exactly at fair value, at least based on the volume profile, then that's why price is kind of oscillating here, because we have a battle between the longs and the shorts to see who's going to win this battle. And determine, okay, are we going to trade higher or are we going to trade lower? Now, since we're seeing an increase in volume, we haven't been able to push lower. More and more, my bearish thesis is degrading and the long trade is developing, right? The long bias is developing. So we're going to wait a little bit more. We want to see, can we reconquer this 50% area? Can we go above this? Or are they going to keep on, you know, pushing lower and selling it here to determine whether we flip our bias and go long or short? And then if we go long, then our risk is right around the low of the opening range. So let's wait and see. The longs have been holding. They've been patient. We haven't dropped. We're still around fair value. So if we can get above this, then we flip our bias and we go long. I always say this. I know it's not from me, it's from somebody else, but we have strong opinions lightly held. So we are open to price getting, as traders, we're open to price going in any direction. We just want to be able to take advantage of it. So far, the longs are convincing us that, okay, now we're looking to oscillate upwards. Let's just see, can this hold? It looks like we could hold because we're back above VWAP. So I might just flip my bias again. Let's see, this was a prior area of resistance. So can this really hold? We're just being a little bit patient. We tried to close above. We're still holding above. All right, we're seeing momentum kind of, you see how the candle is moving faster. I don't know if you could see it, but once the candle starts moving faster, that means momentum is building and we're about to push. We're looking possibly to push higher, or we're probably going to wick up and push lower. But you could see the speed of the prints accelerate. Now, let me just look at something here. I have another platform that I use to look at that. Yeah, we're looking to accelerate here. So we just want to see, okay, is this going to be to the upside or to the downside? And so far, it's looking to the upside. All right, so momentum is in. We're shifting our bias. Our risk is below here. And let's see what we get. If this trade doesn't work out, then that will be my last trade, because then that means that we're going to just keep moving sideways and we're going to need more time for price to digest and do what it really wants to do. So we'll see. Well, oh man, yeah, this was just probably a sweep and then we're going to push lower, but we'll see. Probably just bought the top, sold the bottom. All right, let me take a quick look at gold in the meantime. Gold pushing slightly higher. Gold looking like it wants to kind of break higher. Can I determine how the candles will react by looking at the wicks? I think I understand the question. Of course, I can never know how the candles will react. I can't predict the future. I look at a group of candles and try to determine, okay, based on what I've seen, what might happen. But, you know, it's always a possibility that I'm going to be wrong. So, for example, if we're looking at, let's just go to an older scenario that might be clearer, where we had a lot of wicks. This is a 15, maybe on the 5 we'll see more wicks. Okay, that's probably a good example. So if we're looking at the candles here, we're looking at this orange level, which is VWAP. We see a first wick there, okay? The candles keep oscillating. We see another wick there. We push lower, we push higher, and then guess what? In that same area, so, you know, we saw a wick here, we saw another wick here. We see 2 wicks here again after we've just reconquered this level. So what it tells me is that, well, since we've been wicking in this same area around, you know, 47.65, then it's highly likely that we might need to push lower before we continue to go up, right? And well, that's kind of what we get. We get price pushing lower before it oscillates back to the upside. So when you're seeing, of course, we take a while and we start oscillating again. So when we're looking at wicks, what it means is price didn't spend a lot of time here, right? We rejected from this area. So if we're seeing wicks, around the top, then you see one wick here, another wick here, another wick here, another wick here. Price pulls back, right? And we get kind of engulfing candles. So candles with a huge body. Then we try to push up again, and we see wicks again here. Of course, we tried to push up lower, and we engulfed this whole move and went to retest lower. So price likes to retest areas twice. Now, if I'm answering your question correctly, I don't know exactly how the next candle will react. Now, I look at a group of candles and I say, okay, based on what I've just seen, the likelier scenario, so probabilities wise, 60-40, 70-30, there's probably a higher probability of price pulling back in comparison to going up, right? And that's what we do. But again, that's why we're trading in positive probabilities, because we can always be wrong. So for example, this morning, what did I, all right, the longs are looking good right now. So that's good. Let's see if we can hold this and trend upwards. I didn't get to add. All right, I'll just hold 2 contracts. I didn't get to add here on the break, unfortunately. I don't want to mess up my average price. So here, all we do is we've just shifted our bias, right? Now we're looking for price to move upwards. I'll just put this up here. And what I'm looking for is, okay, we have 3 areas that concern us for now. First area that concerns us is right here. What is price going to do around once we get to this area, right? Around the 27.78s. If we can get there, of course. If we break through here decisively, what we can expect is to break here, to pull back, because this was a prior area of resistance. We pull back and we oscillate higher. The next area I'm looking at is what are we able to do here at the half point? Are we able to break through decisively? Okay, great. If we're able to break through decisively, we pull back. Sorry. If we're able to break through decisively here, all right, the next thing we're looking at is, okay, can we pull back again, hold this, and then form a bullish structure where we go test these highs? So the 3 areas we're looking at for the next, I don't know, hour or so or more is here, here, and here. And depending on how the group of candles behave, we make our decision. So here, that's what we did. We looked at a group of candles, not just the wicks, but the group of candles. I'm going to get my drawings out of the way so we can look at this bigger picture. And let me make this big so we could see. All right, we looked at the price behavior where we're not even looking at all the aspects. We're just looking at a smaller time frame, and we're looking at the wicks. What did I say? I said, okay, they bought here once. Here, price didn't spend a lot of time here. Same thing happened here. Same thing happened here. So it kind of meant that they wanted to push this higher, right? And this is what happened. We opened higher, and then we started to pull back. Now, we saw a wick here. So that was a sign that, okay, they want to push this higher. But we can't just take a trade based on this single wick unless we're taking a very quick scalp for a couple of points, 10 points. Me, I'm usually aiming for 50, 100 points or more. So I need more time for price to develop. So this wick tells us, okay, maybe they want to push this up. And then they reach the old resistance level, and you could see, a lot of wicks there. And again, we didn't spend a lot of time here. We pushed back down and there was another wick, which means they were trying to buy and push it higher, which they tried. But again, we tested this level again and they pushed it lower, which is why it's important to look at a group of candles. So here we had a second top form and we pushed lower. And we could see here, which is the prior resistance levels, they tried to buy it again for about a minute or so. But guess what? We got another wick down, so they pushed it lower. Now, when I saw that we had two wicks here, which means price didn't spend a lot of time, but was not able to push higher. So what we were looking for here, and by the way, we're getting a lot of wicks here, so this might just be the turn, and we might just be pushing lower, but we'll see. Here, I said, okay, we've tried to push higher. We haven't been able to do so. So we need a better discount before we revert back to the upside. That's why I entered short and I kind of targeted this previous low here because that was, you saw these wicks. That's where last time we said, okay, we need to buy. So think of it like a store, right? I always give that this analogy. Say you want to buy some sneakers. The sneakers are selling at $100, and maybe you don't have $100, but you really want the sneakers. Well, what you're gonna do is, man, I'm gonna wait for them to hopefully give a discount. Maybe it's gonna be Christmas. Maybe it's gonna be, I don't know, summer, whatever. They're gonna give discounts. As soon as people hear they're giving 30% off, 50% off, people are gonna go and buy. And usually they like to give you know, a half price on something psychologically, sorry, is usually a very good buy. Sorry. So what I'm trying to do here, and that's why I use my little box, is psychologically, in the first couple of minutes, we moved up here, and this is our $100 sneaker up there. Once we pull back and we get back to 50% off, how eager are people to buy? If people are very eager to buy, we're not going to spend a lot of time here. We're going to go right back up, right? But if people are not eager to buy and they're waiting for this to be like 80% off, and here this was like, if this is 0 to 100, this was, you know, they're giving it for free here. We see people step in and then they're selling it back at $50, then they're not really eager to buy. So we need to wait to see, okay, when are they going to become eager to buy? And that's what happened here. Once we got to here, we saw, okay, they're breaking out and breaking above here. And that's why I decided, okay, let's go and buy. Now, if you're looking for classical chart patterns, this was an ascending triangle. So if you trace all the wicks here, you get your ascending triangle, right? Now we move up, no problem. Ascending triangle pattern, what is to be expected? You break out of the pattern, you pull back, and then you continue higher. If this is actually what's happening, then okay, great. This is a good area for us to add to our position. But we're not sure yet because we're seeing a sell-off here with volume increasing. And guess what? We need to look at the past. Last time we were here, what happened? Well, last time we got to this level here, we pulled back. Guess what? We're right below this area. This pocket here tells you that once price gets here, it's expensive. So are we gonna go here and rebuy it at the 50% discount or no? So we're just waiting to see. Yeah, I don't just use patterns to trade, and this is very tight. This is the 1 minute pattern. It's better to look at patterns on a higher time frame. Now we only have 2 hours to trade. This is why I'm scalping and trading, you know, shorter time frames. And you know what we see on lower time frames is totally valid. You know, it's the market is fractal. Oh man, I forgot to add. Let's just do a quick market add here. All right, so we added to the position and we want to see, okay, can this hold, right? Now we're risking a little bit too much. I don't want to risk more than 100 points. So 50. All right, so I don't, now at this point, I want this. So we've seen everything we need to see for the bullish formation to continue. We've formed a consolidation. We've broken out of the trend. We've gotten there. We've gotten our 50% discount. We've added to the trade. Ideally, I do not want to see this move lower than this area right here. I do not want this to go lower than this. If this gets to here and doesn't wick back up immediately, I'm getting out. Why? Because the price has done everything we needed to do to show us that, okay, we need to go back up. So we need to hold this trend basically. As soon as we break out of this trend, this tells me that buyers are not eager to buy this. They want a better discount. So I'm getting out of the trend. These stops are protective stops. If breaking news comes out and whatever. Ideally, and I'm going to put a line, ideally, once we get to here, and I'm going to put this as a red line. Once we get to here, let me put it in bold. Once we get to here, that means that, you know, this trade is kind of off the table. We need to look for a new trade, right? So if this doesn't work out, then the bearish thesis is back on. Because if you don't see it, price is channeling up. So we need to hold this channel. We need price to kind of continue. We formed the base. We broke out of the base. We pulled back. We want this base to hold. We want the old resistance to become support. And we want to move out of there and continue something like this, right? If we're unable to do this, of course, patterns are not perfect. We could move a little bit out of here, but we don't want, we actually don't want what's happening right now to happen for too long. Why? If it continues for too long, then we are totally bearish. And I might again flip my bias. Yep, I need to stop out of the trade right now. Let's just give it a little bit more time. But right now it's hitting the stop. It might be a fake out. That's why I'm giving it time, right? We might see, oh no, they want to buy it here. So we're giving it a little bit of time. But if it's not convincing us and doesn't want to move up decisively, doesn't want to move up fast, then the short is back on. And we're still inside the box, unfortunately. I usually don't like to take trades inside the box. I prefer to take them outside of the box. Why? Because as long as we're inside here, we're consolidating. We're kind of basically buyers and sellers are fighting to determine which direction we're going to go in. And we might oscillate inside this all day, right? And I don't want to keep flipping my bias. So let's see. Buyers are starting to step in. Is this really... is this really the area where they want to buy or not? So let's see. Greg saying you were just about to ask what candle patterns to look for. Well, it's going to determine on what works for you. There's a lot of patterns, and you have to kind of be aware that you might see patterns where there are none because of your bias. So you constantly need to adjust your thinking when you're trading. And then you always have to zoom out, right? You always have to think, okay, this is a very tight time frame. This is a 1 minute time frame because we're scalping, but we want to zoom out and we want to see, okay, on a higher time frame, on a 60-minute, are we still bullish? Well, yeah, we're kind of still bullish on the 60-minute. So does it make sense to hold a trade? So far, yes, it does. But we need to look at the microstructures also because they're kind of leading indicators as to what might happen. So far, we're seeing what we want to see. We got our ad, and now we definitely want our structure to kind of continue to build here. And preferably, if we're really bullish, what we want to see is actually a move. We want to break out of this little channel higher here and probably go retest these highs and move higher, right? And then that retest is another area where you can add to your position. So if it does work, then great. And if it doesn't work, then we have our line in the sand. At this point, we have a clear level, really clear level to risk off of. And that level is right there where I put my red line. And it's so funny that that is exactly where we bounced off of, right? So we don't want the asset to move lower than this, right? And it's not even a dollar amount or whatever. It's just price wise. We've determined that, okay, this is our line in the sand now. We are clear that this was support. I mean, this was resistance. It became support. It's an area, of course. So we don't want to go retest this. We don't want another discount. If there's another discount, that means that buyers are not interested in buying at higher prices. So at this point, our risk is right there, right at this red line. If we get back to here, we are completely out of the trade. And since we haven't seen aggressive buying, we have one take profit here. Okay, so we have 3 units. We'll get out of one contract here. That pays for the trade. That guarantees that, okay, we got our payroll for our work. And then the extra 2 contracts, we'll probably get one out here and then the other one out here. Why? Because we haven't been moving aggressively to the upside. An aggressive move to the upside would have been something like this. We push higher, we pull back, we push higher again. We pull back, we push higher again. That's not what buyers are showing right now. Maybe they'll show it later in the day, but at least right now, this morning, that has not been the case. They've been very shy, very timid, and haven't been convincing enough when it comes to longs. We're about an hour and a half into the trade, and we're still oscillating inside that box. We haven't stepped outside. We've been moving. What is it? So this is 123 points. Right now, from this wick to this high, we've only moved 90 points, not even 100 points. For the Nasdaq, for an asset that moves on average 200, 250 points in a day, that so far is not very bullish. Will we turn bullish this afternoon, later on during the day? Maybe. We're positioned for it, but if we're not able to do that, then hey, it's just not the day where we're going to get that bullish move, or at least not the morning where we're going to get that bullish move. So we're being patient here. And thanks for the question, guys. I really appreciate it. I really like the questions. Keep them coming. Let me know what you're looking at while this is cooking. Greg saying futures sounds interesting. Yeah, I mean, it's trading in general. The advantage with futures, and what I like with futures, is that you're looking at similar assets every day. You're looking at the Nasdaq, at gold, at ES, and whatever. I used to trade stocks, and there's a lot more things to take into consideration. And I like the leverage with futures. You know, with very small moves, you can make huge profits. So of course, you can make huge losses as well. So that's what I like with futures. I know a lot of people trade Forex, and that's perfectly fine. I've never traded Forex. I know big picture, it's really a sideways market. And it can take a long time for trades to develop. What I like with futures is, you know, on good days, you can get really big moves in a couple minutes or hours, and you're done for the day. So that's what I like. But great. Hopefully you try us out and go slow, trade small. You know, I recommend you start maybe with the ES if you're going to start trading indices. So the ES, let's look at the ES actually. Let's look at what it's doing this morning while this is moving. All right, so the ES is actually channeling upwards, and that's a bullish sign for us for the Nasdaq. So let's see the relative strength wise, the ES is moving better than the Nasdaq. Let's look at the Dow Jones. All right, the Dow Jones is moving nicely. You see, the Dow Jones, when it comes to relative strength, is what I wish the Nasdaq had done, and we probably should have traded this instead, because you see how if this is your initial move, right, you pull back. Well, that's actually from 8 o'clock, so I'm looking at the wrong pattern here. Let me look at, yeah, very good. This is a 5-minute chart. Where's 930? 930 is here. So yeah, we had a move up, a pullback. We didn't spend a lot of time here, and then we just broke the highs and pushed higher, and we're pulling back. This is, so the Dow Jones is actually the most bullish of the three right now, right? So we're exploding upwards on the Dow Jones. Greg saying you're lost in Forex. Yeah, I haven't tried Forex, but honestly, whatever you learn on whatever asset is valid for, because it's humans moving the price around. So you're going to see similar patterns everywhere. But the timing is going to be different, and the intensity of the moves are going to be different. So for example, I've traded crypto in the past, and where here, you know, if you're trading on the New York Open, you might wait maybe 20 minutes, half an hour for a move or a setup to build. Whereas on crypto, sometimes you have to wait, I don't know, 3 days for the setup to build. And I'm not much of a swing trader, so to me, it was too much, you know, I had too much time to wait. And I don't know if it's the same for Forex. That's good for some people who are extremely patient, but I have a tendency to be impatient. So futures works best for me. And then when I compare it to stocks, where you have to take a lot of other things into consideration, you have to consider, okay, what are you trading? Small caps, which means, you know, a smaller company with less shares available, and it's easier to manipulate. Or are you trading a large cap, you know, or a mega cap like Apple or an Nvidia? Or are you trading a mid cap, so something in the middle? You have to consider what's called the float, so the amount of shares that are available to everyone to trade. There's something also called the short float, where it's how do you call that? How many hedge funds, how many funds are short the stock? And if the short float is too high, that's kind of alarming, or it could be, you know, so there's a lot of considerations for when it comes to when it comes to trading stocks. So that's why I like futures. There's less to consider, and you're trading real world assets. You're trading oil, you're trading gold, and you have to kind of look at the macro situations of what's going on in the world. And, you know, I prefer futures because that's where I've found my stride. I've tried everything else. And I realized that, hey, that's where I can that's where I can generate profit. So that's what I'm sticking to, at least for now. Greg saying you're into holding trades. Indeed. Sometimes you take a scalp like that, and it turns into a whole day hold, and then it turns into a multi-day hold. That's what I really like. I really like when you get a great entry, you have multiple contracts, and then you can get like an all-day kind of hold. So that's great. It's about to be 11 o'clock in about 7 minutes. We're very close to our take profit here. Hopefully we get it. The first one, that would be our payroll for the day. And then we still would have a couple more contracts to hold for the rest of the day. What I usually do is I'll take the first contract off, so that pays for the trade. That usually covers a loss if I had the loss before, or adds to my profit. And then what I'll usually do is wait for a pullback, or sometimes if it's a very good entry, so if I had entered a little bit lower, I put my stops at break even. And then I just let the rest of the trade ride to my other profits to see if I get the bonus, you know? So you don't know if you're going to get the bonus or not, but you at least want to get the payroll. So I already see, you know, this moving down a little bit. That means that traders have been anticipating this move, and it's about 50%. So if we measure, it's about 50 points. Yeah, we're 60 plus points away from there. So it's definitely a logical area where we might see a pullback. So hopefully we get it before 11 o'clock, because at 11 London closes, and we might see some erratic moves. Now, why it's important to look back and look at other time frames, you can see that on the hourlies, we're looking pretty bullish, right? So we don't want to get all our contract. All right, we got a first contract out. We got our payroll, so we're good. Now we hold the rest, right? Now we want to see, okay, can we go and test this area here? Can we go break out like I want? Go test here, and we might maybe trim some off here. But if we do decisively, then I'll hold the rest. We can pull back and continue to the upside. That's what I would like to see. Are we going to see that? Well, I don't know. I don't control the market. So now we're in the money. The trade is looking great. So we had one short, took some profit here. We tried again to get a second short. We were wrong on this trade. We waited for the accumulation. When it showed us that it was going to move up, we flipped our bias, and now we hold to see what's going to happen. But so far, at least on the hourlies, we are looking pretty bullish. So if we look on the hourlies, we pull back, we found a bottom, we tested this area here, we pull back again, and now Greg, you can see the wicks, which means around this area here, they've been buying aggressively on the higher time frames. So we could definitely hold this trade unless some news highlight comes out and it completely reverses the bias. Now let's flip and go look at the other assets. Let's look at gold. So gold still moving sideways, still oscillating. We haven't quite broken out of here, but what might look like it's finally giving me an interesting setup. So here, gold, if we are, so a little trick I like to use is I like to flip to a line chart because it eliminates all the, how could I say, all the noise, right? And then I'll find my tops here. And then we can trace a parallel here. What would look great is a decisive break out of here, a pullback, and we don't even want to pull back all the way to here. We want to pull back to this level. So that would mean we would stop here and continue to the upside. That would look great. So if you're looking for a long, well, that's probably the right place to take it. And you risk those prior lows. Yeah, you risk those prior lows, and then you could add to your position here. Of course, this is not financial advice. This is just my recommendation. Now, we need to consider those wicks, but this is probably a good entry for a long, and you could target, that would be a 2-to-1 type of trade where you would be targeting this area. Let's see if it lines up with anything. Yeah, you would be targeting those highs. So Greg saying hasn't found his stride yet, still looking for your footing. Very good. Yeah. Hey, we're constantly, as traders, we're constantly trying to find our stride, and the market keeps reminding us that it's harder than we think. So man, keep going, keep jabbing at it, and eventually you'll get there. Just don't be impatient. It takes a while to get good at this game, and even when you get good, you constantly find new challenges, right? You're constantly trying to get better, which is why it's constantly interesting. And then the markets evolve. You have to evolve with the markets. The technology evolves. So it's very interesting. You get new assets. So it's overall a great thing. For me, it's an exercise in self-discovery. So you'll find out what you're made of trading, especially psychologically. All right, guys. So now we are holding. We got a break above. At this point, we don't want to give back any profits. So it is a logical area for me to put my stop at break even or very close to break even, right under here. And then if we look at an hourly chart, well, what we want to see ideally is 50% of that candle. So, I like to talk about the 50% moves. 50% of that candle is around here, right? Which is around 27.50. So 2750 is right above here, which is the last area of resistance, right around here. So ideally, I do not want, if we're going to get a pullback, I do not want the pullback to go beyond here, right, and continue upwards. So it's why you could put your stop at break. If you were in this trade, you could put your stop at break even. You could even risk a little bit higher to pay for commissions, and the asset should not go push lower than that. And if we're really bullish, well, we're going to take off and go test these higher levels. So right now we are deep in the money. Trade is looking good. Trade is looking perfect. So we're going to let this one ride. And it's 11 o'clock. I'm going to have to let you guys go, but I will see you next week in the markets. Same place. We're trading futures with confidence together, and I'll see you guys soon. Have a great rest of your week. Take care, guys. Thank you, Justin. I hope you got that gold trade.